Well, with interest rates being so low at the moment, people are very concerned about interest rate rises. Like I say, interest rates currently 3.5 to 4.5% for a primary place of residence. They will never go from 4.5% to 15% overnight. They will gradually increase. So having a good broker that can advise you while they're going up, where you've got certain options available like fixing your loan, fixing part of your loan, it's important that you have buffers in place. So you should never borrow money not being able to afford interest rates to go up, because there's certain risks when you buy an investment property. Interest rates might go up. You might not have a tenant. You might have certain things that work against you. So what we do is we build in a buffer, which will allow you an interest rate hike. It will allow your property to not be rented 52 weeks of the year. These are very, very important when getting into the property market, especially when there's uncertainty, like interest rates going up, like will my property be rented, all these things. Now, there's no direct answer because it really depends on everyone's individual circumstances. If they're living in their own home, their primary place of residence, I'll always recommend paying that down first and having your investment loans at interest only. If you're an investor, you'll have two different options. One, you can pay off your loans of your investment properties, which will build equity quicker and will be safer, but it's also slower. If you have interest only, it's a slower strategy, but it's also a safer one because you're building equity. When you've got interest only, you're only depending on the market to grow. When you're paying off the principal, you're actually paying off the principal and the market's growing, which means you'll have a safer buffer, but it is a slower strategy. Now, which is right or wrong, I recommend having a discussion first to see everyone's individual appetite for risk. And then basically we can ascertain, is it interest only or is it principal and interest? Most people will say interest only. You can borrow more money, you can leverage more, and you can make more money. That's all correct, but it does offer a riskier strategy. So some helpful tips to know to getting your loan approved from the bank is to ensure you don't have exorbitant credit card limits, so they're maintainable. You pay your mortgage on time, which is very, very important because they look at repayment history. And more importantly, you live within your means. Because it's very, very easy for now the banks are even looking at Uber Eats, how much that's on your statement. And that actually affects your serviceability. Not having big car loans, not having interest-only loans. These are the things that actually go against you when you're looking at borrowing money. And as I was always told, you're either going to pay interest or you're going to pay tax. I prefer to pay tax, have a high income, so that I can borrow money to invest and make money.